Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. First up, in the European Union, businesses in arts and recreation sectors are making waves, employing a whopping 2.1 million people. This thriving industry continues to shape the EU's economic landscape. Next, we are unveiling Finland's digital economy, a powerhouse contributing 7% to national value added. With over 15 billion euros in digital industries, Finland sets the stage for emerging technologies and innovation, despite the challenges of measuring digitalizations through impact. In other news, the United States retains its top spot for foreign direct investment for the 12th consecutive year, according to Kearney's Global Business Policy Council's 2024 FDI Confidence Index. With a strong economy and innovative policies, the U.S. remains a global leader in attracting foreign investment. Turkey sees a slight decline in February's unemployment rate, now at 8.7%. This positive trend signals potential improvements in the labor market, offering hope for economic recovery. The IMF weighs in on industrial policy, cautioning against viewing it as a magic cure for slow growth. While it can drive innovation, a balanced approach is crucial, emphasizing broader fiscal policies and international cooperation for sustainable economic development. Moving on to the UK, recent recruitment surveys indicate cooling trends in the labor market. Slowed pay growth and increased staff availability pose challenges for policymakers, highlighting the need for strategic interventions to address potential unemployment risks. In Germany, the consumer price index is up by 2.2% year-on-year, with notable decreases in energy prices and food prices. These fluctuations reflect dynamic shifts in the country's economic landscape. In Montenegro, the consumer price index report for March shows a 0.5% increase from February and a significant 5.5% rise from March 2023. Shifting gears, the OECD's latest report underscores the urgent need for massive investment in sustainable infrastructure to combat climate change and enhance resilience. With climate-related events on the rise, governments worldwide are urged to prioritize climate resilience in infrastructure planning, particularly in developing countries. The report estimates a staggering annual investment requirement of $6.9 trillion by 2030 to build climate-resilient infrastructure, emphasizing the importance of international support, especially for the most vulnerable nations. Breaking down retail trends, February saw a 5.1% decline in retail trade sales volume in Belgium compared to the previous year. However, amidst the downturn, the automotive fuel sector stood out with notable growth, reflecting shifting consumer behaviors and economic dynamics. Next, the Carbon Majors report sheds light on the stark reality of carbon emissions, attributing 80% of global carbon dioxide emissions to just 57 entities. And despite emission reduction targets, fossil fuel production continues to expand, posing significant challenges to climate action. This report serves as a critical tool for stakeholders seeking transparency and accountability in emissions management. Turning to construction, Hungary saw a promising 3.2% increase in construction output volume year-on-year. However, compared to the previous month, there was a notable 8.5% decline, reflecting the sector's dynamic nature and economic fluctuations. In Estonia, industrial production trends reveal a 5.7% decrease in total output in February, while mining and electricity production saw increases. Manufacturing experienced a significant 7% decline, reflecting sector-specific challenges. Looking at global trade, the World Trade Organization forecasts a gradual recovery in 2024, despite challenges like high energy prices and geopolitical tensions. While merchandise trade volume declined in 2023, commercial services trade saw notable growth driven by digitally delivered services. Despite uncertainties, trade resilience persists, offering hope for economic recovery worldwide. Again, the IMF's World Economic Outlook provides insight into the global economy's resilience amidst uneven growth. With inflationary pressures and policy priorities in focus, international cooperation and structural reforms are key to navigating uncertainties and fostering sustainable growth. Diving deeper into energy dynamics here, and the International Energy Agency shed light on the transformative power of clean energy. With its remarkable expansion in manufacturing, deployment, and sales sectors, clean energy made waves in 2023, contributing an impressive 10% to global GDP growth. This significant figure underscores the pivotal role of clean energy in shaping economic landscapes worldwide, heralding a new era of sustainable growth and industrial evolution. Meanwhile, in Greece, a decade of economic recovery unfolds amidst persistent challenges. Forecasts predict nearly 3% growth in 2024, outpacing the Eurozone average, while borrowing costs plummet and banks undergo privatization. Labor shortages, climate-related disasters, and inequality remain pressing concerns. Despite strides in economic improvement, many Greeks continue to grapple with high unemployment and stagnant wages, highlighting the need for diversified growth strategies beyond traditional sectors. And shifting gears to the automotive sector, March saw a dip in European Union car registrations, and marking the first decline of the year. A 5.2% drop to 1 million units was attributed to the timing of Easter holidays, impacting sales across major EU markets like Germany, Spain, Italy, and France. However, the first quarter witnessed solid growth with nearly 2.8 million units registered. Italy and France led the pack with a 5.7% increase, reflecting resilience. And moving to Norway, industrial production experienced a slight downturn in the first quarter, with moderate positive expectations for second quarter. While manufacturing saw a decline in domestic orders, exports showed promise, hinting at potential recovery ahead. Producers across various sectors maintain cautious optimism, navigating through market uncertainties and evolving consumer demands. And meanwhile, the OECD celebrates unprecedented milestones in employment rates, surging to 70.1% in the fourth quarter of 2023, marking record highs in labor force participation. This remarkable achievement underscores the resilience of labor markets amidst evolving economic landscapes, signaling positive trends in workforce engagement and productivity. And next, the European chemical sector braces for policy impacts amidst fluctuating demand and geopolitical tensions. With an impending PFAS ban and disruptions in supply chains, the sector faces challenges on multiple fronts. However, amidst adversity, opportunities emerge from the energy transition and sustainability initiatives, paving the way for resilience and adaptation in a rapidly evolving landscape. Now shifting our focus to China, the industrial capacity utilization rate of the steel industry stood at 77.3% in the first quarter of the year. While this marks a slight decrease compared to the previous year, it reflects a notable improvement from the preceding quarter. And in Georgia, producer inflation hits its highest since 2022, with the industrial producer price index witnessing a 1.2% surge. This annual uptick of 4% underscores the growing pressures on Georgia's industrial landscape, highlighting the need for strategic interventions to manage inflationary trends and ensure economic stability. And finally, in Japan, food inflation remains at a 17-month low despite continuous price increases. In March, food prices rose by 4.8% compared to the previous year, marking the lowest increase since September 2022. And despite this, food inflation has persisted for 31 consecutive months, reflecting ongoing challenges in Japan's food market. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.